Welcome to the Pump and Dump channel for another video for this, well, it's Friday now, but for Thursday the 12th of March. Looking at the Dow Jones Industrial Average, it closed at 21,200. I had talked about this yesterday that I thought we would close at 21,700 around there, but we went through, and that suggests further downside, and we're starting to see it here. It seems like it's just going to continue going down. A lot of countries beyond just Italy are now also looking at closing down school for 2 weeks, and having people stay home for a week or two from work. And that's kind of where we are at, and this does seem like it's set to just keep declining to the 18,000 level, which is it is really sad, because a market that declines this fast over a short period of time, if there is some underlying problem like the debt, the liquidity in the markets, and the manufacturing data, for instance, those things are all weak. And then when you get these kind of declines, it takes years to get back to something of any substance. And if it just keeps dropping even further, the further it drops, the bigger the rebound will be in percentage points from the bottom, but you'll never get back to the top. You never get back to here within a reasonable amount of time. So yeah, that's kind of where it's at. We're down 1% at this point in time. There is nothing more to say apart from looking at the news that occurred during the day. We had this one spike here, 1,500 points up from 21.3 to 22.8. It was on this news about the New York Fed offering 500 billion in 3-month repo operation. Basically, they were putting money. They're going to put money into some bank or banks, not 100% sure, for short-term funding, which suggests that either there is a run on the bank happening, or there is maybe a bank that is in serious trouble and is about to implode. Then there was this news here about the Fed announcing over $1 trillion in liquidity, asset purchases, and mainly focusing on the bond market across the yield curve, buying longer and shorter term bonds. Of course, for the stock market, that QE is not of any value. I mean, when you hear that or you read the breaking news, it said that the market rallied over 1,000 points on quantitative easing, and it was kind of explaining that it was for like funding for short-term funding for some banks, which when you read that headline without seeing the price move, you would think that's not good. That means some bank is in trouble. And then as the price came down, the breaking news changed from Dow Jones rallies some on that news, and then as it came back down here, it says it gives back all its gains after the quantitative easing news was announced, and we kind of ended down here at the low again. Very very sad. One positive is the oil price. There is this potential of this wedge that is here forming that will kind of maybe keep the oil price, maybe it can move up in this wedge, and probably it will come back down here and stay in a lower range. I had thought about the OPEC story. The OPEC story says that the Saudis are increasing output and the Russians are increasing output, and that is going to lead to more supply, and therefore the prices are going to go down. And if we look at this in real terms, in practical terms, if we look at producers across a different cost basis, high cost producers, low cost producers, and lower cost producers, then what we have to understand is that when the low cost producers down here start increasing their production to gain market share, of course that increases the supply in the short term, And when you have, of course, the higher cost producers, they have some hedges in place. They can produce and still make money for the first year or 2 years whenever they have their hedges in place. But what you eventually see is that over time the production of these high cost producers starts declining. The higher the cost producer, the more rapidly they decline. And that brings it into balance over the longer term, even as the low cost producers are increasing their supply. It creates a balanced market at a lower level, let's say in the 35 to 50 range. Let's say that would be then your new range for the oil price to trade at, and then that would be good for the low cost producers because then they would make more money in the future. And you'd think like, well, why do they produce more now that the oil price is low? And it's basically about, number one, gaining market share back. Number two, it's maintaining the income that they have been making. Like if you make, like say 100 billion in net income at $50 oil, selling X amounts of barrels, if you double or triple your barrels and sell it for a lower price, of course your margin per barrel is lower, but then you can still get back to like 100 billion in total net income. And this is kind of how companies often operate, is they increase volumes to maintain the net income without any regards to the margin that they are making on the product. And so yeah, basically that is kind of how I explain it. If you look back to the charts we had, of course, apart from the Iran situation with the US, where now it kind of transpires that 3 Americans have been indeed killed in that attack, that missile attack, where Trump said no one was hurt and there's not going to be anything coming out of it. Then we kind of went down for the OPEC cuts that were supposed to help stabilize the price, and then we kind of went into the OPEC meeting, and then it came out that nothing was going to be done, and they actually are increasing production. So thinking about that in terms of psychology, looking at this little graph I've just put out here, what you can conclude is that as prices are falling, there should be a supply cut or production cut by the oil producers. But at some point, if the price just keeps falling to even lower levels, you would say that, well, what's the point of cutting now anymore, because these higher cost producers can't make it at low oil prices, so why not ramp up and then just take the market share off them? Another way to think about it is that whilst prices are falling, it suggests there should be a cut, and if there is no cut and the prices keep falling, then eventually the market corrects itself and it gets these high cost producers out of luck. So that's kind of where we are at. This is the situation. We will see probably the oil price stabilizing in the $30 a barrel range. I saw some people talking about lower prices, $18 a barrel. I think that's very unlikely, but it is possible in a very small amount of of the case of any case. And I saw also some guy on television, he was saying that it could fall to $3 a barrel, and I'm like thinking, what is wrong with this guy? He must be out of his mind. $3 oil, what would that mean? That would mean that you'd be in such a massive deflationary bust that I don't know, like you could buy a whole month's worth of food for like $5 for your entire family. Or it would mean that maybe, let's say, the dollar gets increasingly strong or other currencies collapse against the dollar. But given the situation with how the stock market is collapsing here in the United States, and other stock markets around the world are also collapsing, of course, too, it is more likely that there will be quantitative easing that will actually push up commodity prices in the long term. And this is kind of the stage I think we are at, and why I talked about yesterday the fact that I think energy is the place to be. Of course, even though you have this massive decline in the overall market, the index fund, the index with all these companies in like Boeing and Apple and all these other things going down, like from the highs, like 30% or so it's down, or 40% almost. You have some outliers where industries are doing good. DHT Holdings, I talked about them in one of my videos about shipping. They are the strongest company in the shipping industry that I know about, and they are benefiting from this whole Saudi-Russian fight for, let's say, for the oil market with the Americans, because the Russians, they have some pipelines, of course, with Gazprom and other companies. They have some pipelines that go from Russia to other places where they sell their oil to, but Saudis and the other Middle East and OPEC countries, they rely more on shipping to get their oil to market. And a benefit that has occurred now with the drop of oil price is that the price for the consumer or the buyer, the refineries of the product, has gone down. Oil prices at 30 means that the refineries are willing to pay more in shipping costs to get the cheap oil. And at the same time, with of course the drop in oil price and this IMO 2020 coming into effect, what I've seen is that the premium of low sulfur fuel oil has dropped from about $200 and something to about $80 or $90. And that kind of suggests that lower operating costs for non-scrubber vessels are helping those vessels be competitive with the scrubber equipped vessels. And at the same time, we also have this this surge in the let me just check to get the exact numbers. We have a surge in the shipping rates. The VLCCs have gone from 45,000, I think this week. From 45,000 on Monday, I think they went up to like 100 and, or no, they went up to 93,000 on Tuesday, and then Wednesday up to 193, and now for Thursday they went up to 213,000 per day. That's the spot rate. And I talked about how these companies were like kind of positioning themselves to roll off the charters and get into the spot market, and it's probably benefiting companies like DHT Holding at this point in time, and that's why they are seeing their share price, after it peaked in, I think, early December and then rolled over going into January, February. Now it's kind of recovering and going higher at the same time that the Dow Jones is falling apart. And going back to the 5-year chart, there was a similar situation in 2016, but or 15 and 16, I think it was. But I'm not sure for DHT Holding. I remember for Tsakos Energy Navigation and Nordic American Tankers, it was more profoundly noticeable. We had a run up in 2015, which came at the same time as the oil price collapsed back here going into 2016. And the situation there was that oil companies, they couldn't sell their oil for a profit. Oil traders saw there was too much oil out there, and basically what they did was they hired these ships or these tankers to store oil in them, waiting for the oil price to recover, and that drove up shipping rates. And I remember Tsakos Energy Navigation in 2015 had signed a charter rate for, I think it was 6 months or so, for about $55,000 a day for just a boat to sit there without having any operating costs. And that kind of led to that spike. And this is something that has been now discussed too, is that with this glut in oil that we supposedly had, especially when the oil price was higher, before people are now going to start thinking about the future of $30 oil will mean that the supply will come down, because not all companies can actually produce oil at this level, let alone make a profit, especially in the United States. I think like 20 to 25 is like the best producers are in that range, all in cost. Of course, they're taking in not just the amount it costs them to get the oil out of the ground, but also to pay their debts and cover other expenses. So yeah, main focus is on the stock market. This is where most people, especially in the United States, are looking at. This is just going to keep falling. There is no support, to be honest. There is, depending on where you place your initial starting point for this chart, this trend line on the chart, you can see how it just comes down here into the 18,000s. If you just like do a trend line like this, but most importantly, you have to also consider that the next major line of strong support is over here, and the way it's falling, all these little bumps we have here, these are just weak supports. They will not hold. They will most likely just crater all the way down to here, have maybe some difficulty, and then go through here. And then we'll have another Black Friday of a Dow Jones dropping 3,000 points, a 15% decline in one day, and that will be epic. The losses that will come out of this will be epic, especially if it doesn't recover. I mean, in all honesty, I think that if we do go down to 18,000, the pace we have gone down here, it's very likely we're going to rebound back up to 21,000. I talked about this yesterday, what I thought would happen. So go down to 18,000, bounce up to 21, and then just keep going down from there. There'll be no treatment or vaccine for the coronavirus by tomorrow. Maybe over the weekend there'll be some positive news that comes out that says that they have some progress or some development. They're close to a treatment, and then the market can rally on that a few days, and maybe something else happens. A celebrity or a politician who gets the coronavirus dies, and then you are in a situation where it hits the headline news that anyone is vulnerable, and someone that people have seen, like everyone has seen in a country, like let's say Donald Trump has the coronavirus because there was this news about him and Pence meeting with a Brazilian official, and that Brazilian official, he tested positive for coronavirus later on. So let's say Trump and Pence have the coronavirus, and that could cause a major scare, especially it could be that he has the virus, but then he's not in a serious state at the beginning, and he says he feels fine, and so on and so forth, and then the market will still go down, and as his situation deteriorates, it will just absolutely collapse. I mean, that is a real possibility. But I still hoped I'm kind of wrong, but I mean, in terms of how I showed the charts previously, if you go back to my videos, the ones the 7th of February and the 29th of February, if you just look at the videos and look at the charts, I showed how the oil price decline resembles exactly the chart pattern of this S&P and Dow Jones decline. So yeah, I don't know what more to say. Oil price is looking good at this point in time. Let's hope it gets some strength here, can get going. And if it doesn't, then it doesn't. So I'm going to leave it with that. Don't know what more to say. Remember to leave questions, comments and opinions in the comment section. If you like the content, don't forget to subscribe, and have a good day.